Welcome back to Unlimited Capital. I'm your host, Richard McGurr. I just had a great conversation with Danny Gould that I'm going to show you guys today. So Danny used to co-manage a $300 million hospitality group. And then he went off on his own to start a fund of funds and become a fund of funds professional. He did that for a lot of the reasons which attracted me to the model, which is he loves the ability to source and solve problems for his LPs. And he was a big believer in having an LP first business. So I think that there's a lot that we can take from this today. I think something that he's really good at is identifying his specific avatars, who he works with. He works with medical professionals. He works with a lot of Stanford alumni because of his alumni network. And he's able to use that to cultivate relationships, build rapport, and grow his investor database. I think you guys are really going to enjoy this. And with that, let's get to the show. Hey, Danny, how you doing? Welcome to Unlimited Capital.
Yeah, man. Thanks for having me, Richard. This is going to be a lot of fun.
So for those of us who don't know you, why don't you give us a quick overview about what you do and what's going on over at Gould Capital?
Yeah. So I run Gould Capital. We're a private investment office. And we have two core functions. We raise for various commercial real estate projects around the country via a fund of funds model. Mm-hmm. For those that don't know what that is, basically I put together what's called an SPV, special purpose vehicle. It's just a fancy word for an LLC. And I raise capital from retail investors around the country. They invest into our fund, and then my fund, the SPV, invests into a syndicated deal or a commercial real estate fund. And
yeah, I'm a huge fan of that strategy. I'm a fund of funds guy too.
Yeah, no, fund of funds it's definitely something that's gained some traction and popularity over the last, I would say, couple of years. I mean, I've only been exposed to the model myself for a handful of years. And so that's our primary core function. And then we also, for sponsors that have, equity mandates in excess of $10 million, our $1 to $3 million LP check isn't always like going to move the needle significantly in the right direction. And so I have a ton of family office and institutional connections from my previous experiences, and as a result, I work as a consultant, a marketing consultant for larger sponsors that need institutional capital to kind of complete their projects. So connecting them with the family offices and other groups that I have access to as well. So those are really the two core functions. We have our retail division, which is our fund of funds model, and then our institutional division, which is really what I call our capital desk model, right? Where we basically find great sponsors that need large checks, and we help them find large check writers that would be excited to invest into their deal.
So that's super cool. So yeah, you kind of mentioned about your background. Your background is actually quite impressive. You co-managed a $300 million hospitality fund. Why don't you tell us a bit about that?
Yeah, so I actually started my career in residential real estate, and that was coming right out of college. So I went to Stanford for undergrad. I got my BS in biology. And just like any other pre-med student at Stanford, I immediately got my realtor's license after graduating, which my mom was stoked about, by the way. She loved that. She was like, yeah, that sounds awesome. Realtor after 4 years of Stanford. Super thrilled. And so anyways, I did that. I grew my real estate team. We were one of the top teams here in Silicon Valley. And then in the back of my head, from the time I was 21, really, I was in Las Vegas, and I was sitting at the Bacchanal buffet at Caesar's Palace, and it was in that moment I was like in awe of like the grandioseness of everything, but it didn't really it didn't make me feel little. It made me like want to elevate, right? Like sitting there. because sometimes you can get in those big rooms and you kind of feel like, oh, like intimidated or small, right? Or like you're just another person there. But I was like, I want to own one of these things one day. That was where my head went to. And so since that day, I've my North Star has been to build a hotel casino on the Las Vegas Strip, and so
to build one.
Correct. Yeah. So I didn't know how I was going to get there, but I was like, yeah, selling houses seems like a good place to start. So I just
real estate,
yeah, it's real estate. It's somewhere in the, it's like in the vicinity. It's Vegas adjacent, right? So I'm like, all right, let's do this. And so, anyways, eventually I made a pivot into hospitality, and through networking and various other channels, was made or got connected to a couple of different hoteliers, JD and Sujay, and the three of us formed GMS Ventures. And so they both had their own portfolios prior to us kind of like joining up and creating our group, and then we just kind of hit the ground running and started working together. And so that was end of 22, beginning of 23.
Wow. And you guys, like, how long did it take you guys to get to 300 million? Or was that like,
that was aggregate portfolio amongst like every, like what they brought to the table too. Right. Exactly.
Okay.
So, yeah. But that was, yeah, man, it was a great experience, working with them, and then, and that, we had some really good, kind of like experiences together, and then just eventually decided to kind of branch off and do my own thing.
Yeah. Tell me more about that. Like, was it a matter of deciding you were ready to do your own thing? And how did you know?
So my main role in the portfolio was, investor relations and acquisitions. And so, from the get-go, one of the challenges with raising for a hospitality fund was, you've got your investment thesis and you've got your investor pool, but you're limited by the investors that are interested in your specific asset class and that buy into your particular investment thesis, right? And so as you niche down, yes, like they say, riches are in the niches or whatever. But the truth is that if you're casting a really wide net and you're bringing a lot of investors into your database, if you're running a fund like that for a specific asset class with a specific investment thesis, you're going to find that like a lot of the investors that you make a connection with have no interest in investing with you, right?
Especially if it's super niche.
Correct. Yeah. Correct. Or if it's in an asset class where, in the 23, remember, we were just kind of starting that, like that topsy-turvy ride that we've been on here in the last couple of years. And so, a risk aversion, hospitality sounds risky, right? Even though our investment thesis was buy distressed hotels, right? So we were leaning into the risk, actually. Our investment thesis was, yes, there are distressed hotels and we are going to take advantage of that. But still, you're going to have people that have their own philosophies, own way of viewing things. And not that we didn't have success, but what I have a sales background. I started, as a realtor, but I grew a 35 person sales team. So I had 35 agents that worked for me. And, one of the core principles in sales is that you've got to believe what you're selling.
Yes.
Right? You've got to believe in what you're selling. And I truly believe in hospitality. I truly believe in hotels. And I believed in the investment thesis, I'm not here to force you, right? I don't want to force you into buying something, investing in something that doesn't make sense for you. And so understanding and believing in what you're selling is one thing, or believing in what you're selling is one thing, but also
and a requirement.
Correct. understanding the needs of the investor is just as crucial to being a successful salesperson, right? And so what I found is like, hey, there's a lot of investors where after kind of talking to them for like 30, 45 minutes, I was like, I don't think you should invest into this fund, right? And I was kind of coming to that conclusion a lot, not because we weren't doing a good job, but just their needs were not in alignment with what the fund was going to be offering. And so, after a certain amount of time, and I have my own podcast as well, and I just talked to a bunch of different sponsors across different asset classes and everything, and I was like, wouldn't it be cool? Because this sponsor's awesome. Like Richard does a great job, and I would love to, invest with Richard, but I've got my own thing going on right now here, but wouldn't it be smart to diversify a little bit? Wouldn't it be intelligent to kind of like get out there and kind of put myself into different deals across a variety of asset classes? And so that's kind of where this concept, or the first time where I thought like maybe I shouldn't just focus on this one asset class, but rather focus across a variety of asset classes and run more of like a fund of funds model.
I totally agree with you. What you're talking about is something that I have thought about a lot, and I think is one of the main benefits of being a fund of funds is when you're a fund of funds, you are LP focused versus, and I'll get into that a little later, but first I'll define the counterpoint, which is being an operator, where if you're an operator, you are deal focused, and that the reason you have LPs is that you require LP capital to do deals, but that's about it. When you are like living and like, you ask these guys about an address, like every time I interview an operator and they're like, tell me about like 438 Logan Street. And they're just like, oh man, they'll talk for like an hour. Yeah. And it's like, okay, this is you like living and breathing your deals. And then for them, capital, like they need it, but it is like 3 or 4 steps down the chain in terms of their priorities in life. Like it's only because they have to do it. Like, I guess we have to do this versus I think as a fund of funds operator, it's just like you said, we are about cultivating an audience or a group of LPs, analyzing their needs, and then sourcing products which solve their problems. Like my partner the other week was, we're looking at a deal. It's actually a very attractive deal. I really want to do it. They're buying a lot of large communities of new builds that aren't moving. Because like in the Denver market right now, there's like a lot of new builds are really struggling to move because interest rates have gone up. Like our inventory is just like through the roof and continues to soar. And so, all of these new builders are, they built all these on floating rate debt, and that they were assuming we're going to go sell like X percentage of units, a month. And that obviously that's really huge cash flow to pay off the loan. And that stuff's just not moving. And so like, I know like firsthand some very good builders that are about to lose some projects. And so, I mean, that's a great investment thesis. And this company is just like, hey, we've got like a big institution behind us. We're just going to buy these units and hold them for 3 years, and then sell them once like the market kind of rationalizes. Yeah. And then my partner's like, it's a great thesis. I was like, that's not enough, man. Like, what problem does this solve for the investor? And then I think the reason we're going to do the deal is I was like, are we getting year 1 depreciation? Because that's the thing. Like when we have a specific need that an investor needs, and like a lot of the time it's depreciation, especially like latter half of the year. Yep. Like I need this much depreciation. You bring a product that brings this much depreciation, or it's like, I need so much cash flow, for my financial goals, or to be W-2 optional, or all these things. Okay. Then I need to go find you an investment that is very income focused. So like that is like our job as a fund of funds manager, is to be like obsessed with the LP and their needs, and then find and source products that like meet those needs.
I couldn't have said it better myself.
Yeah, because it could be a great deal. It's not going to move. Like unless we can like really solve a pain point. I'm sorry, there's like a ton of deals out there that are all, quote unquote 20 IRR, this or that. But like, give me a specific feature that's going to solve a specific problem for my investor, and we are going to have a 20 times easier job moving it.
Yeah. There's a podcast that I listened to, a sales podcast that I listened to like 12, 13 years ago. It was like one of the first pieces of like knowledge that I retained. And there's this guy that was talking about how he was very successful at sales, and his motto was find a need, fill a need, find a need, fill a need, right? Yeah. And it's true, and that's where you hit it right on the head. Sponsors tend to be very deal focused, and what I felt was inauthentic. And I'm not saying that we did this, right? My previous group did, or this was our philosophy, but what I've noticed just in general is there's an inauthenticity a lot of times with some sponsors, because they will, even if they know the deal isn't right for you, they're still going to try, because they
have a hammer. They have one hammer and everything is a nail.
Exactly. They need to fill the stack, and they're like, hey, you've got money. This is a great deal for you, right? Everything's always a great deal, right? For them. But with us, with our model, it's we can be super discerning. I'll tell you, since the beginning of the year, I've analyzed 250 plus deals at this point. Since the beginning of the year, we've made one SPV allocation so far. And we might do one or two more before the end of the year. So very high bar for us.
And also, being a great deal is not good enough. It has to really have a very specific benefit that solves a very specific problem for a large portion of your LPs.
100%. And you hit it on. It can't just be one LP, right? If it's one LP, I know this is a great deal for. And by the way, I have no problem doing that. I'm not one of these guys that's super transactional. If I see a great deal and I know it would work great for one of my LPs, but not enough to put an SPV together, I'll just refer them straight to the sponsor. Yeah. I'm not one of those guys.
Well, it's also this is a long-term relationship business.
Correct. Correct. So and that really does go a long way. But to your point, as a sponsor, the roles are the order of importance is it's deal first, and then
which it has to be. And this is not pejorative. I think we're all just to be clear to everyone listening, these are not judgments we're making or anything like that. We're speaking about a very specific role within this ecosystem and our job within that role. We absolutely need deals. We absolutely need operators doing the great deals. That's all a given. I just want to clarify that before we go on a tangent and it's fun to fun guys are so great.
Yeah, no, 100%. And by the way, we need the great, we need the great sponsors. That's just obviously. Without great sponsors, we can't do deals, right? We kind of, it's a very symbiotic relationship. And here and this is why I love the fund of funds model, because it is a win-win-win. Mm-hmm. It's a win for the sponsors because they have to, larger checks, right? So way less work for them. They've only got to deal with one LP.
They don't want to grow a sales team. They're deal guys. I just told you, capital to them is an absolute afterthought. And to compete in the retail market, it's you need a marketing department, an ad budget, a sales team, a full-time CRM / RevOps guy. Yeah. You need to be doing content 3 times a week. You need to be doing this. And they're just no, no, I don't have time for that. I want to do my deals.
They just want to be, or they're like me. Honestly, man, and this is where I got really, where I was really conflicted, is because I love, I would consider myself a good salesperson. I had a lot of success in sales so far. And so I know I have the skill set there, but the truth is I'm an analyst at heart, dude. I fucking love Excel. Can I swear? I'm sorry.
Yes. Actually, marketing tip, when you swear, it one, makes the audience wake up, and number 2, actually you appear more trustworthy. So let's not go overboard, but you're allowed to do that.
There we go. All right, cool. So I love Excel, and I love underwriting hotel. That was my favorite thing to do, man. It still is. It was. I still do it every day. But I love underwriting, and I just love playing with Excel, and I'm a nerd like that. But and that's another thing too. Not to get too far off the path, but you asked me kind of what caused me to switch gears is running there are so many different roles there, but in this model that I've got right now, it's pared down the responsibilities to just a few things, right? And I'm thinking about the long-term trajectory, Richard, of my business, which is, or my long-term goals here, which is I want to build a hotel in Las Vegas. Well, what do I need to do that? Well, I need a lot of things, but the number one thing you need is money, right? You can't do it without the money. And so,
I think I know where you're going. We have the same thesis. We will vertically integrate at the time and place of our choosing.
Yeah. It can happen the other way, but I just feel like
the chicken and egg is very much capital first.
Much more painful. Well, let's just think about it this way, right? There are so many more deals right now than capital.
Yeah. Unlike a few years ago, this is how the cycle goes.
Right. And so right now but even still, right? Like, if he or she who controls the money controls everything, right?
Or at the very least, will always have a job. Always have a role. You'll always be able to get into pretty much any deal you want, any asset class you want, if you can bring capital.
Correct. That need will never go away. And so I just looked at the overall, kind of like big picture, and I just felt like this was the right move for me. And it also it made the authenticity that I can show up to work with every day now is I'm just like so real now with people. And not that I wasn't real before, but like, again, when you've only got one product to sell or one thing to sell, it's a little different versus now I can be a true steward of their capital.
Yes.
As Lance Peterson likes to say, shout out to Lance. Steward of their capital. It's like, hey, like I get to understand your needs, your wants. Yes. I want to know, what your financial goals are. I want to understand, like how many vacations do you want to take a year? How hands-on, hands-off you want to be? Like, what do you want? Cash flow, depreciation benefits, appreciation. What are the things that really are going to help move the needle for you in the right direction? And then I'm only going to show you the deals that make sense for you.
Well, I mean, it goes back to what you said about like having to believe in your product. I mean, you say a lot of things that actually have come up on the show multiple times. And I mean that in a very good way. I'm talking about the most important points that have ever come up on this show. And I always say, like, you have to absolutely believe in your product. And I think, like you said, having the product suite as a fund of funds manager means that you can have even more conviction, because I can know your personal financial situation, even though we don't make recommendations, obviously. But I can say, like, hey, your life situation is such that you're trying to build income. That's our most common thing that we hear, because we actually focus on successful single family landlords, or 1 to 4 unit, and like making a transition and going passive. And so because of that avatar, income is always like kind of the main thing.
Sure.
And so the thing is that unlike the 100 other operators that are out there selling whatever deal, most of those deals are actual capital appreciation or capital growth deals. And that they're not seeing and not aware that what they really need is income and deals that are specifically generated to generate a certain amount of income. And that when we're able to make that connection, I mean, I feel great about it. My reps feel great about it, and the customer gets it. And it just makes it so easy to like give a great webinar, get on a sales call, and like feel really, really, really good taking the money because you were doing this person a favor and you got them in a great deal.
Yep. Very true. Couldn't agree more, man. Couldn't agree more.
We're two fun of funds guys on the same wavelength. This is
the
So earlier you were talking about niching down. So how do you niche down in your current business, or like how are you applying that?
That's a great question. I mean, for what we're doing right now, for what I'm doing right now, I have really niched down the avatar of retail investor that we're going after. Cause as a marketing guy, like, dude, you could go bankrupt trying to market yourself and literally have zero success. If you're not careful. So you have to be very, very intentional with the marketing, and the messaging has to resonate with the specific audience. I love your idea, by the way, of going after the 1 to 4. If you own 1 to 4 rentals, that's a great. Once you've eclipsed like the 10 to 12 mark, there's probably no going back, right? Like that's just a different beast. But I love
and also
the idea.
They don't like passive. Those people also have a great
Correct.
deal of difficulty trusting someone else with their own money.
Correct. Yeah. They're control freaks. Which I completely agree with you.
All due respect. I wish I had 12 properties. I have 2.
Yeah. Well, yeah. I mean, dude, I've worked with, like I said, I've helped dozens of investors over my time as a realtor, and I mean, you see all shapes and sizes, right? But you're right. Like normally, you get to the 2 to 3 mark, and if you're not cut out for that, you get exposed real fast. So I love your idea of like 1 to 4, because like that, or 1 to 5, like that's kind of like the range where you're if you're not really cut out for it, you're already mentally planning your escape. So,
but you've probably, like, our avatar is in their typically like 50s plus. They've owned these rentals for 10 years in Denver, and therefore they got a ton of equity. And that means, we can go deploy that into substantially higher yield assets. So like it's double qualification. But anyways, back to you. Enough about my avatar.
Love that. So for me, I've niched down the avatars, right, of like who I'm going after. So right now the easiest one for me is I go after execs that are Stanford alumni. That is, they're high net worth individuals, and we share the same alma mater. So like that's just a really easy conversation starter, right? And primarily use LinkedIn for that, to find, to Sales Navigator, to like find these people and just start conversations with them. And then I also go after physicians. I think there's a lot of people doing the physician thing.
Because you were pre-med, you bring that in?
Oh, because I was pre-med. Correct. You got it. Yep. So I've got a lot of friends. So I understand their pain points, man. Because like I have so many friends that I still talk to regularly that, we went to class with and everything. So I know exactly what they're going through right now. But I also have, friends that are a little bit older, right? Like in their 40s, 50s. So I basically have connections kind of in the various degrees of the progression.
We call it as affinity. I think you're looking for is layers of affinity, like affinity groups.
Yeah, exactly. So, and you hit it on the head. So there's that. And then the last one is sales. So salespeople, now I have different like niches or whatever in the sales community, but basically like I'm looking for salespeople that have been at their job for, many years and clearly have, more of like a higher level role in the company. They're not like a, bottom rung salesperson. They're making good commissions. Cause like the truth is, man, for salespeople specifically, one of the biggest pain points for salespeople is, and this is true for a lot of people, but they do make a lot of money. They have no idea. They have no time to figure out what to do with it. Same thing with physicians, right? Yeah. They make money and with salespeople, they make them like in tranches. Right.
Well, and a lot of income volatility was where I thought you were going to go with that. Like it could also like disappear at any time.
Correct. And so like having those conversations, it takes one bad year for a salesperson to come back around. They'll always bounce back, they're resilient because they're all, most of them are resilient and they're, stubborn as all hell. But on the comeback, on the bounce back year, that's a great time to get in front of them.
Yeah.
It's like, hey, how do we prevent that from happening again?
Yes.
Yeah. So yeah, man, those are really like the three. I like your terminology there. Affinity groups. Yes. Affinity groups, different layers.
Yeah, that's an actual correct scientific terminology.
Is it? Okay.
Yeah.
I'm not that scientific, then clearly.
There you go. No, I went to a Cal State. Sorry, guys. So I could teach a Stanford guy something. There you go. Okay. So why don't you actually tell me about the other side of the business? I'm like genuinely curious about this because we have never even attempted to go after family office. Like not even, well, mostly because it's a niche down thing. Like our niche is retail investors. And not just that, we're a big believer in focus. A lot of this comes from like Alex Hormozy. And so we do not spread ourselves thin. We are good at one thing because typically by the time so I'll unpack the Hormozy thing because I think everybody needs to hear it, is that like, I can't remember what the principle's called, where like when you're new at something, you think it's really easy, and then you very quickly figure out it's hard. And that's where a lot of entrepreneurs get dissuaded and try and find greener pastures, thinking that like, oh, the grass on the other side of the greener, I'm going to go over there. Except we don't realize is that you've just restarted that process. Of now lost like, and the problem is by the time it gets hard, that's when you actually figure out how to do this and like figure out how to get good. And that you just need to like stick it out. And then you'll go find that, you'll break through and like you'll actually figure the game out. And so that's why we've never done FO, even though it's come around. Like I've had clients ask for it. Like, can I have an RIA strategy? Can I have this? Can I have that? And we just stick to the retail marketing because like it's a beast on its own and I don't want to get distracted. Like, but that said, I really want to hear about how you go about that. And like, this is for the audience, best ever listeners. Like how do you know that you have a deal or a strategy that is a right fit for these types of checks?
Yeah.
And then what are like the positives and negatives of working with people like this? And then I would say, C, finally, like, how do you go about finding them?
Yeah. You're going to have to walk me through each. I'm like,
okay, first, but where I was like, how do you know if you're a good fit for wanting to go after FOs?
I see. Okay. Gotcha. Well, just to kind of put a bow on what you just said too. By the way, Hermosi is amazing, dude. I can't wait for his book launch.
I am like an absolute disciple.
Yeah. No, he's amazing. And actually, it was his, one of his podcasts that I listened to, that actually that same day after the podcast was that I dissolved my real estate team and went all in on hotels. Yeah, it was like it was like a slap you in the face kind of.
He's good at that. Yeah, he's in your face.
I was like, all right, I guess I got to do it. And like, I think the only way to lose, one of the only ways to lose in business is to be indecisive. And so I just made a decision, and I got to live with it. Right? Some people call me crazy. A lot of people thought I was crazy. A lot of people still think I'm crazy because, I was
dissolving a 30-person team is a big deal.
I was very successful. So it was hard. It was, hard to let go. But hey, it's life is a fun ride, man. It's a really, really fun ride. But
that's the point of life, I would say, is to have a fun ride. I mean,
100%. So when I started working with GMS, we were raising a $50 million fund, and I knew, like, dude, I'm not going to raise $100 million or $100,000 retail checks. I mean, we could, but like, it's not going to fill the full.
No. Well, if you had like 100,000 people on a list, but I don't think you did.
No, exactly.
Yeah.
And so I developed a marketing system to get in front of family offices. And I remember, like, it was probably like 4 weeks after we started raising for the fund. Like, I was lining up like 5 to 7 meetings with family offices a week. And my partners were like, dude, how are you doing this? And I'm like, my little secret. But yeah, so I found I use cold email. It's not like a huge secret, right? Like, cold emails can be really effective. It can also be like wildly ineffective if you're good at it. Yeah, exactly. If you're good at it, it can be effective. And you've also got to there's several things you have to know about cold email to like be good at it. You have to understand the science behind the the system, right? And there's a whole to set it up and to like make sure that you're actually getting inside of inboxes, et cetera. That's one part of it. And then the second part of it is the copy, right?
And the mass personalization.
Yeah, I actually, to be honest with you, I haven't done that yet. I've been thinking of exploring. Now there's some tools and AI tools and whatnot that can get really personal, and eerily accurately personal too, to the point where it could be a fun experiment. Again, I'm trying to like not add too many
stay focused
at once. And since it's been effective, I haven't really deviated. But anyways, yeah, I mean, I started that in 23, and made a lot of connections with FOs in that time, and built my own like list through that. And that was actually another reason why I kind of switched models too, is because like I realized the appetite for commercial real estate was there, but maybe not hospitality. So I was like, dude, how many of these FOs do I have relationships with that would be interested in other asset classes? Right. So that was definitely like a consideration for me, when I kind of decided to do my own thing, was on the retail side, was having those thoughts. And then also on the institutional side too. I'm like, okay, well, maybe I should think about, branching out a little bit. But still, I would say 50% of the deal flow that I have right now and is in the hospitality sector. So I'm still very hospitality heavy.
So basically you're saying if you have a very large amount of money to raise, it's at the point where like you have to be looking at family offices, like when you're getting into the, high eights equity checks.
Okay. See, it's really hard for me to give this kind of advice because I feel like I'm underqualified, to give that kind of advice. Because let me put it to you this way. No matter what you're raising for, no matter what the check sizes look like, whatever, a day will come where you will wish you had tried to make those connections. So you might as well start now. A day will come where you wish, like you might be good, right? But like you might be good for 10 years, but then like year 11, you're like, hey, all of a sudden I want to do a different asset, I want to do a different deal size or asset class or whatever. Like maybe you're focusing only on like, I know guys that, do like, smaller flips, or they're doing, 10 to 20 unit apartment buildings. They don't need family offices for that. But if one day they decide, hey, I want to do a 500 unit apartment building,
build a hotel in Vegas,
or they want to build a hotel, how are we going to do that? So a day will come where you wish you had made that, where you had made that effort. So you might as well start now, because the truth is like databases only compound over time. So this is like, this is one thing that it's like, this is the long game, right? If you like for the next year, could I get by without marketing to them? Absolutely. Right. But is that really in the best interest of my long-term vision and goals? The answer is no.
So I have a view on family offices that I would say maybe makes me kind of averse to going after them. And I'll tell you why. It's because I spent a very short amount of my career as a venture capitalist. And that my job was to take meetings. And that I feel like if you're on the deal team in an FO, it's your job to meet with sponsors, and that therefore the hit rate of you on the sponsor side or salesperson or investor relations person trying to do these people is that you got to burn through like 100 meetings. And it's these guys' job to ask for follow-up meetings, ask for materials, and that ultimately, they're doing their job correctly by looking at 500 opportunities and investing in one.
Yep.
And that therefore you have to invest an enormous amount of time in these guys. And so, but I think you cracked it, in that maybe that's me being too transactional about the way I'm looking at it, because I'm looking at it only as the first sale. Because that's not how I look at my retail LPs, for example. Is that like we measure?
Oh man,
we do a good month. Like we raise about 1.8 million a month right now, which is like pretty decent.
That's great.
And that we had 7 new LPs last month, but 66%, and it was like absolutely classic number. 66% of LP capital came from repeats. 33% came from new. However, I also know statistically that at least half of my new LPs will double their position within 6 months. And so I have like a very clear, and that's in fact the main reason we're even worried about new LPs, is because, okay, if 66% of my raise, or ideally or hypothetically, all of it could just be filled with repeats. However, eventually that well runs dry.
Right.
or at the very least, we'll get a cap in growth because they only can yield so many LP dollars per investor. So that we have to like very intentionally stay focused on closing new relationships every month, like as its separate KPI, because like once someone closes once, they're going to close multiple times. So is that how I need to think about these FO guys? Is that even if I strike out on my first deal, which you almost certainly will with them, like you will have a very long conversation. It's going to go nowhere.
They will never invest with you on the first deal, dude. I can't think of a single person that I've helped. Like, yeah, no, there's like no way they're going to invest with you on the first deal. It's the long game with them. And, you know, to your point, like I would say that, and when I talk to like the sponsors that I help market for and consult for, I explained to them that I might have about like 20 of them that I have like really tight connection with.
Yeah.
So I've got like different layers, right? I've got my inner circle layer, right? Like the ones that are super close, and then ones that I've had multiple conversations with, sent multiple deals to, but we never really like truly connected.
Yeah.
And then I've got that third layer where like we had like our first discovery call, and then like they open my emails, and that's about it. You know, we don't really have like an extensive relationship. But I can tell you that with each one of those 20, I've broken bread with, or had multiple cocktail hour with, or whatever. So
it's a very long game with these guys, is what you're saying. And that even like it's not a loss to get pretty far down a deal with them because you have that relationship. And now you just need to spend the next couple of years sort of maintaining it, staying on their radar, and eventually they'll do a deal. I see. Yeah.
Yeah. And honestly, like, here's the thing, man. Like, again, you hit it on the head, because it's like, okay, so let's say, and I'm just using this as an example, right? But you just talked about like, hey, you made it, and yes, sometimes you're not talking to like, if you're going to a multifamily office, right? They've got 2 to 4 analysts on the team, and you're probably talking to one of the analysts. You're not talking to the the CEO or the executor or like the managing partner or whatever. You're talking to, number 27 on the roster, right?
And the guy whose job it is to take meetings, like, and all he does is take meetings.
Correct. But number 27 at the roster in a couple of years gets promoted or
or laterals or
they do. And like, they're people, dude. Like they talk, like, they refer you to, they're like, hey, you should talk to this person. You should talk to that person. It's crazy. It's so funny how you said that, right? Where it's like, should I reframe it to like being more of yes, man. Cause every investor is like, they're the same, right? They might have different guidelines, whatever. FOs might have.
Well, with these guys, it takes way longer. Cause with like with a retail LP, they'll probably invest within 6 months, or at least a large portion of them will.
Sure.
And the rest maybe over 18. But with these guys, you're saying it's like a couple years. But when they do invest, it's
yeah.
Okay.
Yeah, it could be. It could be. And yeah, man. I mean, it's the long game. It's totally the long game. And I would say, like, because one of my goals for 2026 is, because I really spent a lot of time focusing on FOs, but also expanding into other institutional capital sources like PE firms and whatnot. Just because, I want to see how that goes. So TBD on how that goes, but I'm excited. I have a feeling that like, if I just run the same playbook, I'm going to find.
Because we're talking about literally the basics of sales and how sales has been done for thousands of years.
Right. It's nothing fancy, man. It's like, at the end of the day, you still gotta, people are still going to invest with people that they trust. Still going to invest with people that they like. Right. Exactly. Yeah. And you're never going to earn someone's trust, and you're never really going to, you might take a liking to them, but you're not really going to like actually like somebody after meeting them for the first time. You'll be, this seems like a cool guy. So you gotta build that relationship, over time. And yeah, man,
very cool.
It's a fun game. By the way, just a side note, I would really like to hear what you guys are doing on the I'm happy to exchange notes here. What's working for you guys on the single family or like the investor side of things? I would love to hear kind of like
dude, go to propertyllama.com and I have a tool that helps landlords. They plug in their portfolio and we tell them how bad their yields are. And then they go, oh no. And then we say, what if you invested in this instead? And that my business partner is has a degree in financial planning, and loves real estate and everything like that. And so, yeah, we just take it's essentially a financial planning approach to landlords, because landlords have very specific needs and very few financial planners understand them or can advise them, because it's such a complicated asset class that most of these guys, I've talked to RIAs, even my RIA strategy was going to be hey, do you want this platform for free? And that they're just 1% of our clientele owns real estate or something like that. You know what I mean? Or 5%. Yeah. And so basically what we do is we turn equity into income. If I were to put it into our core message for these people, or now that depreciation is back, is going to be creating strategies to offset the capital gains hit from selling a property.
Yeah.
And that's why I was I only care about two things: depreciation and income. Because that's what my avatar needs.
Yeah. Dude, I'm looking at Property Llama right now. It's interesting. So you direct people to this website to have them do I see. And are you doing it via mail, snail mail mostly, or
no? My co-founder is a contributor and soon to be the host on Passive Pockets on Bigger Pockets. And that we have the Denver Investment Real Estate podcast and denverinvestmentrealestate.com. And we're super local. The other angle is that we are super local, because another Hormoziism is that local marketing is dramatically easier, especially for high ticket, because there's so much higher relevance and trust that's just built in. Right. And so that's what makes us very untypical, that we, even though we have national reach, no, we are focused on Denver, dude. Especially because Denver has the real estate prices in Denver are just shoof. And so anyone who's been buying properties out here in the past 10 years is sitting on millions, And that also the legislation is getting really bad out here as far as tenant stuff. And so all these people are generally also getting into retirement, and they're they don't want to be landlords anymore. Most of them self-manage, and they're just okay, I'm ready to enjoy my wealth. And also if you own in Denver, these are all 3 caps. And I'm especially if you plug it into our software, and I'm you're earning 3% cash on equity right now. If you were to go put this in a CD, you would increase your income by 50%. You got 1.6 million in equity and your current cash flow is 20,000 a year, but your goal is 100 to 150, which is what the software shows. And I'm just well, do you have $3 million to buy a bunch of rentals? And they're no. And I'm well, click in the software, sell this thing, put it in a debt fund. And you're bam. And because dude, if you throw 600 grand into a debt fund, that's going to throw off some yield.
100%. Yeah. I mean, what's the yield on the debt fund that you guys are running?
It's a little cheeky, but we're at 24% year to date.
How?
Because over half the income from a debt fund is origination, except most debt funds, the manager takes all the origination as their quote unquote compensation.
I see.
And so the debt fund we work with splits the origination and splits the yield with the investor, and that therefore substantially drives yield.
Dude, that's really good. Holy shit. Yeah.
I'm putting together a fund of funds program for it. It's a pretty, to get the discount to make it worthwhile, you need 10 million with them. I have 10 million with them. I'm figuring out how to make that work soon. You're on the short list. I can tell you're interested. This is the greatest product since sliced bread. We just sell we sell the shit out of this thing. I'm not even kidding. Last month, I have it open right now. June 2025, we did 2.5 million into it.
Dude, that's 2.5 million invested into the debt fund?
In just June.
That's crazy, dude. That's awesome. Yeah,
Well, also because debt
would
funds
be
drive huge checks because the people work backwards from an income goal. That's why income is
right,
such a great thing to sell. Is I'm like, you need
right.
how much? Okay, therefore, plug into the calculator. You need to give me 300 grand.
So,
Versus in equity, it's never like that. In equity,
right.
it's all just like I'll throw you 50.
Yeah. Right. That's really fascinating, man. The is this all commercial real estate backed or
No, it's say 1 to 4 unit, and then up to like 10 unit, just hard money loans.
okay, so it's still real estate backed.
No, it's
Just not
it's the same. Like we had a lawyer, a guy who runs a hard money fund out in California, and a guy who does commercial underwriting at a bank. Look at A, their loan tape, and B, their underwriting guidelines. It's the same damn fund as everybody else. It's just when you share the origination, the yields double.
Mm-hmm.
Like that's it.
That's incredible.
Yeah.
That's so great, man. Yeah.
Well, it's also so easy
Sounds
to explain. Like because people are just like, especially because real estate investors know what hard money is.
Mm-hmm.
And
Mm-hmm.
so like
Mm-hmm.
that's another thing that makes it easy is that I don't have to go like take them over this huge journey of explaining some exotic asset class to them and how does this all work. Like they know what a hard money fund is.
Right.
They know what points are.
Right.
And so I'm just like with points, without points. That's the difference. That's the only difference here. And they're just like, boom.
Makes sense.
Yeah.
Cool, man. Cool.
Okay, where were we going? Like, so when you're telling me about like dealing with these contacts at the family offices and growing the relationships and having to maintain all the relationships, like that's a lot of work. And that's where technology and marketing automation. And I noticed in your like form that you gave me when you were signing up to the podcast that you use HubSpot, which I would consider a relatively sophisticated setup. Like someone who's using HubSpot is probably very decent at this kind of stuff. So like, how do you use technology to like help you cultivate and maintain all these relationships at scale?
Yeah. I can attest to, I mean, HubSpot is incredibly robust, but just like anything else, the more robust it is, the more difficult and complex it is to set up. I did not know what I did not know what I was getting myself into. Okay. when I signed up for HubSpot. But I will say that I am glad that I did it now because the features and everything, like I am starting to fully comprehend the power of the software. To answer your question though, Richard, the setup is, I spent a few months just writing a bunch of nurture plans, action plans, and everything out. And I installed all of those into the software.
What are your nurture plans?
So I have a few of them just based off of like life cycle and like lead status and whatever. But essentially I have like templated emails that kind of like go out. But the truth is there's a couple stages to the life cycle. The first is before you've made contact with them for the first time, and then once you've made contact with them. So
you have two different nurture sequences and they hop from one to the other once you've actually like gotten on a call?
I have way more than two. I have like 8 or something like that, just depending on like where they're at, right? And it flips on and off depending on where they're at in the sequence. But a lot of the lead flow that I have is inbound, right? So they kind of skip a lot of the initial sequences because if they're inbound, then there's already like a base level interest there, right? Versus if it's outbound, then it's a little bit trickier, right? Because it's more of like a cold outreach. But if it's inbound, then they skip a lot of the nurture sequence and then just kind of goes to like a straight follow-up sequence. Look, the main goal, Richard, and I'm not sure how you guys run it for your fund, but like for me, the sole purpose of HubSpot is to book meetings.
Yes.
Right? Like I need to get in front of these guys. So all the nurture sequences in the world, whatever, it's like the main goal is get them to meet with you. Once they've met with you and you explain your business model, It's either, hey, they are no longer interested in talking to you, which is perfectly fine, or there's an interest there, and then they're just going to be on my distribution list moving forward. And I don't know if you just saw, but ChatGPT came out with Agent Assist yesterday. So
I have not.
What I'm trying to do now is actually I'm thinking about eliminating all of my nurture sequences and just building out AIs to like AI agents to go into my HubSpot and actually do the follow up for me based off of the life cycle sequence. So I still have to play with that, but like let me just put it to you this way, man. Nurture sequences and action plans and all that bullshit, like that's gone. Like in a year from now, those things will no longer exist. You will train AI models on how to nurture for you, and there will be customized nurture sequences for every single lead in your database.
Okay, I will have a counterpoint on that.
Yeah.
Which is, I think in many other industries that is definitely the case. In ours, if you read the terms of service of Claude and ChatGPT, specifically in financial services, they require human in the loop. Nothing that bot produces can go to a customer without a human signing off on it.
Fair enough, but to your
Sorry,
point,
I totally because my co-founder says the same thing. Like I said, he's got a financial planning background, and he's like, "What if we just create this giant database of all my podcasts, and then the customers can go interact with it?" And I'm like, "That sounds really great in practice, but the odds of that thing providing financial advice and us being liable makes me really
and actually, so." I would never, at least not now, I'm not going to be comfortable with ChatGPT or any AI going into my HubSpot and just like doing all of the follow-up for me. But, but they can draft emails, they can draft text messages, and all I have to do is review and send. So that or somebody else.
What they can do, you got me cooking now. Or what they can do is you can have the set of approved templates. Because that way you know that none of this stuff is like, off the field or giving financial advice or doing anything or telling people it's risk-free. Right. And you're like, okay, make an assessment of this guy's goals, based on all these other things and my sales call transcripts, and then automatically put him into the right sequence. I think that something like that.
Yeah. Yeah. 100%, man. And there, look, AI will shrink a sales team of 20 down to 2.
Yeah.
Right. It's not
our
going to replace
headcount is like cut in half over the past year or past 2 years.
There's a couple of different AI sales solutions that have been pitched over the last couple of months. They've all been very impressive. And it's just like, it's crazy, man. I mean, the level of sophistication, that these AIs have been able to basically develop over the last couple of years is insane. But also like think about it like this though. And, guys like me and you, I would say like, we're still kind of like we're on the come up, right? I don't think I've made it yet, like at all. I'm very much still building,
still producing content.
Here's the thing though, dude, AI will be the reason guys like me and you can like climb up the ladder exponentially.
Oh, for sure, dude. That's like how I started my first business was in college. And it's because this was a Stanford startup that was
nice
funded through Stanford. And it was the biggest electronic music blog in the US.
Okay.
And then I was called Less Than 3, which is the heart symbol. And I was just a blogger at that company, like writing about music. Yeah. And then when suddenly everybody wanted to buy social media, I was like, hey, of course they're going to hire a 21-year-old kid because that's the only person who understands this stuff, and I was like, this is my shot right now. Yeah. It's like a very new industry that I'm going to be a very fast mover on it. So I totally agree with you that like AI is that right now. If you are, I think you got to be a savvy, smart person. And these are very complicated tools and you got to be really good at them. You can't just like, oh yeah. Like I heard of a guy, this is ridiculous. He had I don't even want to say the name of the domain because I don't want to like
out him. Yeah.
Well, or make allegations or anything like that. But I'll say he had an amazing domain, and his promise to customers was that I'm going to create an upsell for you if you already have a database, because it's a great idea, right? You're like, I've got this huge database.
Yep.
Usually coming up with an upsell or a cross sell is a really easy way to get margin. And I'm going to charge you like 15 grand up front and then a percentage of sales. I mean, this sounds great in concept, and the guy could have done it. And then he went and like hired a bunch of people overseas and just said, go take the client brief, put it in ChatGPT and just like dump garbage out to their list. Exactly. You're right. Like I see your face where your eyes just went up and you're like, that's an amazing idea. And this guy's like, okay, go hire foreigners at $5 an hour and let the AI do it. No, that's not how to use AI. Extreme example. But
no, there's certainly, I mean, that's the problem with AI too, is that it's also going to empower bad players too, just as much as it empowers the good players, it empowers the bad players. But ultimately, you know, I think that if you understand, like, that's why, like, I try and play with AI like almost every day right now. Because I'm trying to learn, I'm trying to develop the skill, you know, because it is a skill, and I do think that it's going to, you know, enable. It already has, like, it's already made a massive impact on my business, you know.
Yeah, but I think it's very much one of those things where like the top 5%, very power law type thing, are going to maintain 95% of the benefit. And so if your edge is AI, you need to be like the best at it,
100%,
not decent at it. Not okay at it. You need to be like exceptionally good at it if you consider this an edge for your business.
1,000%, 1,000%, man. Yeah, no, you got me excited, dude. You've got me excited. I mean, this is a very exciting time to be an entrepreneur.
Yes.
It's just an incredibly exciting time because AI will go down as the greatest invention in human history. I'm convinced of it. Like it's crazy the things that we can do.
I think we're getting into futurism before we wrap up. I think that, so I was formerly a technologist. Like I said, I was a VC and then I moved into actual like more technical stuff. Like I was a software consultant. I had an app development business, like pretty successful one.
Yeah.
I think that the road to actualizing these gains and productivity gains from AI, I think people get really doomer because they think that the singularity is like 3 years away. And that like, if you haven't made it in 3 years, the singularity for our non-techie people, this is a real estate show. The singularity is when AI develops full sentience, takes over basically the entire world overnight. And then we're in like a post-scarcity world. I think that's like 20 years away on the low end. I think that this pace of change will be dramatically more gradual. But that's a good thing because that means like you have more time, because if the singularity was really 3 years away, like there's no time to do anything. Like the die is cast. I think that a lot of this is also driven by the electricity needs, and that what has done that for me is that I wrote a small AI bot, and that the cost of running that API for such a small function is like $50 a month. Like all it does is record our chat transcripts. Well, I record our chat scripts in a different system. And then I have a board of advisors, including Alex Hormozy, give me advice on my business. And that thing literally costs $50 a month in pure API credits for doing just a tiny bit of inference. If you want to talk about like the amount of like AI really running the world, just it's so expensive to run that we're decades away from like really AI like running our entire world and everything else like that. But that's like, to bring this back home, I think that's a good thing because it means that there is ample opportunity for a normal person or guys like you and I to really have an edge and not just be like, oh, humans are obsolete tomorrow. So
I don't see that happening. I agree with you. I'm not a doom and gloomer like with that stuff. I'm an eternal optimist. This could be, I think, one of my fatal flaws, but also, I don't know. But, yeah, man, I see it as a massively empowering tool. And that's it right now. You know, I'm not worried about like, who cares? 5, 10 years, like that's then. This is now, you know, and I'm just focused on the now and how we can continue to improve right now. And I just see so many use cases for it, dude. I just see so many use cases in it, and it's just continuing to grow.
Yeah, like the
really
next thing I'm
fast.
building is I'm building a bot that is going to read my sales guys' transcripts and then surface new objections. If an objection isn't handled well, it's going to rate how well he stuck to the script.
Yep.
I mean, I think the reason I'm just telling you this is that I totally agree with you that even where the technology is just today, it's an enormous problem space to even implement this in your business. Like even if the development of these models stopped and they never improved, we would see productivity gains from this for like decades of just because that's how long it's got to take to completely re-engineer your process or think of every possible use case for this stuff.
Yeah.
And so with that said, crazy ending to this episode of Unlimited Capital. The future,
we went everywhere.
AI everywhere, raising money, making money, serving customers, serving LPs. If our listeners were to remember just one thing from our conversation today, what would it be?
Yeah, I would. I go back to what we were talking about with the retail versus institutional LPs and family offices and everything. And I would just stop overthinking who the check writer is and just remembering that everyone is a human, and they're all people. And ultimately, if we just approach every relationship with the long game in mind, I do think that ultimately the level of success that you're going to achieve in the long run is going to be a lot higher. Having seen so many salespeople who are purely transaction based, one year they're doing great, and the next year they're completely broke. But the guys and the gals that focus on relationship based businesses, you see growth year after year after year after year. And then one day someone interviews them and says, "How did you get so lucky?"
Yes. Yeah, very much. Very much. So thanks, Danny. Where can everybody find you if they want to learn more or work with you?
Two places that I would drop me a follow. You guys can follow me on LinkedIn, Danny Gould, DANNY GOULD. And then go check out my YouTube channel, Investing Secrets TV. Just got that off the ground maybe 6-9 months ago or so, and trying to ramp that one up. So excited for the YouTube and
turn on notifications, subscribe, do all that.
Whole thing, yeah. And if you are more of a podcast or an audio person, since this is you can check out the podcast. I'm actually going through a rebrand right now. It was formerly known as the Gould Mind Podcast, but season 3, which is dropping after Labor Day, will now be from then on be known as the Investing Secrets Podcast. So you can go check that out too.
Very cool.
Yeah, man.
Well, thanks for coming on the show, Danny.
All right, Richard. Appreciate you, man.
Until next time.